go in a little bit more of this. So one, you say that your company's different. You've obviously won the Better Business Bureau Award. I mean, this is the Torch Award. That's huge. That's awesome. But give me some examples. Like, what makes your company different? Tell me some stories. What's happening with your clients and how they come to you to help us better understand how you're different?
Well, ironically, I had a mortgage loan officer whose fiance came to see us, and he said he could not finance a can of beans 6 months before he saw us. I said, "Excuse me, what?" And he said, "We could not finance a can of beans." 6 months after being with us.
Just so you know, you can't finance a can of beans because it's 69 cents.
Right. But he came to us, and within 5 to 6 months, he was approved to finance her engagement ring, went back and got a lower rate on her wedding ring.
Hey.
Within a month after that, went and bought a new truck.
Hey.
And now they've just moved into a $300,000 plus home, custom home built in Brock. These are people that 6 months ago were living in apartments with no possibility and no hope. The man makes a good living. There was incorrect, erroneous information on his credit report. And only because he was with us and we worked diligently for him, persistently for him, there they are 6 months later, newly married and moving into a home.
What are those things do you feel make the most difference when you're looking at someone's credit report or your specialists are and you go, aha? This is because people, they don't know. It's like,
Right.
what on that credit report that you find makes the most difference?
Well, in his case, unfortunately, there was a divorce and the ex-wife got a credit card in his name after the fact. So, that went into judgment. Judgment or charge off, I can't remember. But that's a situation where that's not his account. That's not his responsibility. And so that was something we could take care of. I have other people, like one of my first clients was a real estate agent and a friend of mine. And she, said, you increased my scores 100 points. And I said, well, I don't know that we increased them that much. We didn't do that much for you. But one of the key things we told her, which we tell a lot of people when we do a detailed analysis with them, is you've got to pay down those credit card balances. Keeping those at minimum 25 to 30% of the available credit can increase your scores significantly. So it's not uncommon for us to visit with someone, do an analysis on the report and say, you really don't need our services. You really just need to pay some of these balances down. And the industry standard is 25 to 30%. Another obscure example is that the information out there says that 79% of all credit reports have errors, incorrect information. 25% of those errors are serious enough to cause credit denial. That means 1 in 5 people are getting denied credit because of incorrect information on their report. We had an interesting gentleman come into our office. And had a similar, very, very similar name to another man in his small town. And when we pulled up the report, 35 of this other gentleman's negative collection information was on our client's report. Within 45 days, these people called me crying, saying, we got pre-approved to buy a house and we just bought a car. And we walked into the car dealership and they pulled our credit. And for the first time, we got treated with the respect we deserve. So what we do matters.